Welcome to this LinkedIn live debate hosted by Marvin Labs. We'll be discussing gaming's next-gen risks and returns with a sprinkling of festive cheer. Our October LinkedIn Live gaming themed event laid the foundation for how live services and digital distribution have reshaped monetization cost structures and risk exposure. The session today moves deeper into platform dynamics, execution risk, and valuation implication, especially as the sector shifts from packaged media to ongoing engagement models. We'll also challenge long-held assumptions about console strategies, including whether exclusivity still drives system sales and how content cadence affects investor viability and visibility of future cash flows. As always, check out the Marvin Labs blog page for all our recent articles on gaming and other AI investment areas. But first, let me introduce two people who will bring some festive cheer to this discussion and provide expert perspectives. First, with his Christmas hat, let me introduce Alex.
Hi, I'm Alex. I'm here for the Christmas cheer. As you can see by my amazing Christmas hat, it has electronics in it. So I can't figure out how to turn them on. I'm the CEO and founder of Marvin Labs, and I spent most of my professional life in and around investments. And now I am running Marvin Labs, which is developing a co-pilot for professional investors.
That's great. And Lewis, would you like to introduce yourself as well? Because you've got a very rich background in gaming as a professional gamer. So it'd be great to just hear a little bit about your background as well for the audience.
Sure. Hello, everyone. Thanks for tuning in. My name is Lewis Sterica. To give you some perspective, I'm 33 years old. I've played games for 30 years. So I'm very familiar with how games have evolved over time. I've kept very close to it. It's been probably my first love in terms of a hobby. I was professional in my late teenage years and early 20s. Took part in mainly first-person shooter games, but I've dipped my toe into pretty much every single genre you can think of. And so I bring that kind of perspective from a behavioral perspective, the consumer perspective. I think I'm quite tuned in to how people think. In terms of my career, it's an interesting path for me to get here. For a long time, I was in recruitment, but then I went and did an MBA and an MSc in finance. And in the last 5 years, focused a lot of my energies into equity research, mainly looking at the gaming industry, but also peripheral sectors as well, to get a more holistic view of how the sector is going. I've also created my website, Equity LS, which has some equity research on it as well as models. And I'm also currently very happy to be in collaboration with Alex and with Marvin Labs.
Great, that's great. Well, Lewis, Alex, it's a very festive session. I mean, this time of year is obviously an important time for many people with gaming because they get games in their Christmas stockings. Or is that the case given the way streaming is going at the moment? There are no stockings, there are no physical games to drop into them. But we're going to take a look, I guess, at some questions to start off with. And the audience can ask questions by dropping them into the comments feature. But first question off the bat here about what should equity analysts prioritize more next year in 2026? Is it daily active users, payer conversion rates, or sentiment around launch quality? And given the way the industry has developed, some of those points about active users, payer conversion, and sentiment vary depending on the game and the platform. So I'm going to come to you first, Lewis, because that's a chunky question to start with.
Sure. So from an analyst perspective, all three matter. And all three are mattering more and more when live services are becoming more ubiquitous on consoles. Mobile games, which are free to play, always have monetization built in-app purchases, advertisements, etc. So daily active users is a leading indicator for the success of the game on mobile. When it comes to AAA, there's two different AAA experiences. There's a premium experience, which is usually a complete single-player experience, which you'll probably get between 20 and 40 hours, depending on what the game is, with very little monetization. That's very front-loaded as an execution question. However, how well the game is executed on release, that probably gives you a leading indication of how the game will perform financially. Live service games is a mix of both because it's front loaded with costs, because usually the game costs $70, $60, depending on whatever. And then over the course of the game, content will drop at a decent cadence, of which will try and encourage players, will retain players, and also get them to maybe spend more money on cosmetics, etc. So from an analyst perspective, you can divide them into 3 bits. You can have mobile, which is definitely daily active users, annual returns per user. For premium games, it's really how well the launch is successful, and for live service games, it's a mix of the two.
That's really interesting. Like you say, it can be a mix of the two. Alex, what's your thoughts on it?
Yeah, I think it's I think Lewis is right. It's a mix, and I think and I think we'll touch on it in a few minutes anyway. But I think a key reason why companies have to resort to these more premium experiences, in particular on the AAA side, is because there's still a lot of reluctance in the industry to move the actual upfront price point of games. So you see a lot of models, even for ostensibly single player experiences, where you have built-in DLC or subscription models, which you could probably argue on a different price point would entail a kind of different commercial model, but as there is so much resistance moving away from what the current upfront price point is, it's very difficult. So I think part of this premium is just it's a buy now pay later kind of structure for gaming, where you are actually buying the whole product and you're just spreading it out a little, and you're increasing the risk on the publisher in cancellation rates. I'd actually be interested to see kind of for these more single player experience how much cancellation is happening across the life of a title. But it's it's certainly not a lot, and I think this is still a kind of a theme in the industry where it's effectively a very sophisticated buy now pay later model.
Yeah, I think that's a good point about buy now pay later. I think for me there's a question I think as well, throwing it in. I don't know what your thoughts are on this, Lewis. For analysts, is where games are almost like remastered. Thinking of something like Last of Us, kind of part 2, where it's sort of like, should investors ask if remasters are simply funding the next hit or kind of papering over a thin roadmap, and therefore, yes, it might have once been a AAA, but it's actually leaning in on nostalgia rather than a new AAA kind of launch. I'm curious about your thoughts on the dynamics of remastering in that mix when you gave your answer, particularly when you think about something like Sony's decision to remaster quite an old game.
I think it's actually the opposite problem. The Last of Us that you brought up there, the thing that is, I think analysts should be cautious about is that actually the game hasn't been out for very long at all, and it's already been remastered. I think that's the bigger issue. There is the argument to be made that there has been a generational shift in consoles. So the PlayStation 4 had The Last of Us 2. It was one of the last titles on the PlayStation 4, one of the mainline ones. PlayStation 5 gets a remaster. From a commercial perspective, it does make some degree of sense, I think, because gamers have an odd appetite for playing games at a new level of fidelity, despite the fact it doesn't really change anything. You could also make the argument that it gives the studio the ability to solve any issues on that other game by repackaging it into a nicer, shinier version. Now, again, you can make the argument that this is not good practice, but it does make some commercial sense. When you look at companies like Capcom, who remade Resident Evil series games from the 90s, different kind of controls, a totally different kind of setup, tank controls, not very sophisticated to a modern audience. Remaking them in a more modern way, more accessible, so you can use the nostalgia you say, but bring in a new audience, I think is a perfectly reasonable and pretty logical thing to do if you're going to use the money to then create the next Resident Evil game. The next Resident Evil game is called Requiem, comes out in February. And so it creates an ecosystem where I think the gamer is actually recognizes, okay, there's going to be a supplementary remake that's going to come. Resident Evil 5 may well be the one after Resident Evil Requiem. And then after that will be the next sequel in the series, which will probably cost more because it'll be high levels of fidelity, a totally different game to actually build. Whereas using old assets, all you need to do is kind of like merge into a new engine. I think it's a lower cost to the company. They're using assets they're very familiar with from a development perspective, and the money they get is going to be obviously of higher margin if the execution at launch, which is what I mentioned earlier, is done very well. And I think Capcom is an example of a studio that does that very, very well. There are other examples of companies who are like Sony, who I'd look at and have an analyst, and if I was an analyst, I'd say, why is the company Naughty Dog, the developer behind The Last of Us, making a remake already? Is this because there's a new IP they need to fund, which they actually do have coming out in a couple of years' time? Or is it because there is actually a dearth in creativity in the studio, leading to a circumstance where they need to make a game to fill time, and they can use that money to then maybe 5 or 6 years' time develop something that's going to be fresh and new in the next big thing?
I think I really like that, because I'm in the same space around that. You know, if you take something like the Tomb Raider series, you know, that was something that had the same, and that spanned nearly 2 decades, I think, in terms of time frame, which sort of brings me to another question, which is around the whole price point and the pricing dynamics here, which again for analysts very important in terms of trying to work out value within the organization. You know, or I guess is a $70 sort of, which seems to be the sort of new sort of price point, is the $70 pricing sustainable in an environment of sort of patch reliant launches? We've been talking about several recently. You know, is that sustainable with so many patches coming out? Can value expectations be met at that level?
I think that it's conditionally sustainable. I think that there are certain franchises, and certain evergreen franchises, to be more specific, that have historically been very strong and very durable. So Nintendo thrive off of this. Super Mario, Zelda, etc. Their tentpole releases for these franchises tend to be very long. There's some big gaps in between that are supplemented by remakes, as we just kind of mentioned, or you know, sort of other titles like spin-offs, like Hyrule Kingdoms or Hyrule Legends, which came out very recently. A Zelda title. It's not a mainline one, but they release it anyway to whet the appetite. I think that that's fine, because they have a baked-in player base that's got a high level of brand loyalty, that people will actually buy the game no matter what it is. I think $70 is probably the ceiling for most games that release from other studios that are mid-tier. And maybe even if there's studios that have franchises that are pretty successful, have historically been successful, like Halo, for example, or Call of Duty. But in actuality, you mentioned the difficulties at launch with patches and fixes and sentiment completely dying off the back of a terrible release. Then, in fact, the effective price point for games is probably a lot lower than $70, because sales kick in very, very quickly. There are also other ways to access these games that don't require you to pay full price. Game Pass, for example, $30 a month. Get the whole library, the whole suite of Microsoft games. You can do it on PC as well. This is baked into the consumer's mind now. And so I think they're quite happy to sort of, you know, look at reviews, not be so hasty to pre-order like they might have been 10, 15 years ago. I was guilty of that. But now, YouTube, social media, reviewers, the understanding that there are other ways to actually access these games without paying top dollar, I actually think that really the price point of games is really around between 40 and 60 in reality. You've got stores like Steam that will discount games on a seasonal basis. And if the sentiment for a game is really bad, they could have a deep discount within 6 weeks of launch, which is what's happened in the last few years for some AAA games. So I think that it is sustainable if the developer and the publisher know exactly where the franchise or the game they are releasing sits, and whether it's something that they think in the short term will actually bring them the highest price point they can get, because consumers will buy it anyway. But for smaller studios or mid-sized studios, I think they need to be a little bit more cognizant of the audience they're trying to grab, and actually build trust first before trying to push up that more luxury price point, which I see $80 being at.
Yeah. And just before I come to Alex, I think one thing I saw this week that I think is interesting is the new dynamic of FIFA and Netflix, in the sense of the FIFA football franchise that was previously EA is now handed from FIFA to Netflix, which is an interesting change, both in terms of platform, but also the pricing model, you know, to the point that it's included within your Netflix subscription. So that's something that I noted as a different dynamic again within the gaming industry. Now, whether a studio that's never developed and launched a game before can reach the standards of an EA is questionable, and what this game will look like in terms of playability is another question. But the price point, they're clearly not going to go for a $70 price point for it. Whereas if it had been a standalone game with EA, that might have had that as a AAA kind of title. Alex, what's your thought on the $70 kind of price point, the big one-off hit, and as Lewis says, the risk that some games are heavily discounting very quickly?
I think realistically, $70 for the industry is just not a viable price point. In particular, if you look at some of the investment costs that are going into some of the larger AAA titles, and I'm actually still surprised that the industry is kind of, and the consumer base is kind of so resistant to move the price point. And as I mentioned earlier, right, that publishers have to resort to strategies to mass pricing, right? These game subscriptions, bundling into Netflix. That's just a very kind of neat way of hiding the direct price point for the game. And I think it's I think the fact that we kind of have this almost a single price point for a game, irrespective of what it is, right? Basically at least one of the AAA game, irrespective of what it is, right? And the two strategies people have is you either have a DLC schedule where you are getting kind of more out of the game in over the next year, or you launch at that price point, and as Lewis pointed out, right, and then you start discounting it heavily. But you cannot price a game at $40. They cannot price a AAA game out of the gate at $40, at $80, at $90. Right? It's kind of it's an interesting dynamic which then kind of makes people resort to some of these strategies, either heavily discounting or staggering it out, having a subscription model, having microtransactions, right? I mean, like everything that you see in the proper EA FC game in terms of microtransaction is just a way to squeeze more cash flow out of the eyeball.
Yeah, I definitely agree. I mean, I think one piece you touched upon, Lewis, a minute ago was Halo, and games like Halo moving to PlayStation, for example, in terms of the sort of console strategy diverging. And do you think, I'll come to you first, Lewis, on this, and then Alex, do you think that exclusivity is still a viable system mover, or is it now more of a legacy play? There's a lot more. If I took, Halo to PlayStation is a really interesting move. I've played many of the Halo games right from the start, and that was a really exclusive kind of thing. But that's now changed. We look at FIFA onto Netflix, but yet you still have Nintendo, who really strongly stick to their legacy system and exclusivity. What's your thoughts on that? About is console strategy diverging?
There's certainly a divergence happening. It's getting to the point where you have Microsoft, who are now more interested in distribution first than hardware second. I think it's mainly driven from the fact that Xbox hardware has struggled in the last decade. The Xbox One, the Xbox Series X, they are both wildly behind in terms of sales compared to the Nintendo Switch, the Nintendo Wii, PlayStation 4, PlayStation 5. Give an example very quickly. In November, the busiest month of the year for this kind of retail sales, I think the Xbox Series X sold 125,000 units in North America. I think the Nintendo Switch 2 sold 500,000 and the PlayStation 5 sold 750,000. So bearing in mind that the PlayStation 5 is 5 years old, it's outsold a Nintendo console, which has been out for 6 months and tends to be something that many people would like to buy because it's more child friendly. And again, they have evergreen franchises, like I mentioned, that people just want to buy. But clearly there's a divergence going on here. Microsoft realizes hardware can't be the first port of call anymore. So this is why I think they're now a lot more flexible with their franchises, because if they put Halo on PlayStation players will eat it up, because many players would have played Xbox and PlayStation, were quite interested in playing on a PlayStation just because. And also it's higher margins for Microsoft as well, because if they just get a 30% cut from every sale on the PlayStation, that's very easy margin they've made straight away. On top of the subscription service that they've got, they're more interested, I think, in utilizing their cloud infrastructure and allowing players to access their libraries that way, even on PC, not requiring the hardware. And so I think they're doing everything they possibly can to spread the ecosystem so it's not so hardware focused. You mentioned Nintendo. Nintendo has very, very strong in-demand franchises. I said were evergreen. You know, they're very, very durable and sell for years and years and years in advance. I think Mario Kart 8 sold 80 million copies, although that is slightly dubious because a lot of that's packaged with the console. But it's still a remarkable amount of games that are being sold for a game that's over 10 years old now. And so you have those two examples where one is very distribution based, one is very exclusive based. You've got PlayStation sits in the middle because they still have exclusives like God of War, The Last of Us, the Nathan Drake series name I can't remember at the moment, but they have timed exclusivity, so they still want to maintain a value proposition on the console. This is the only place, this is the first place you can play these critically acclaimed games that everyone loves, but we will put these on PC 12 or 18 months down the line because it extends the monetization life of those games which don't have microtransactions built in. So it's a hybrid model they're chasing.
Yes.
So I think then these are the three diverging paths they're taking. I think it's out of necessity because Microsoft clearly doesn't think their hardware is good enough to sell, maybe because their exclusivity is really poor anyway, so just trying to spread as much as they can. Nintendo wants to protect their first-party games and not have them on any other platforms, at least very sparingly. And PlayStation are actually, I think, towing the line between them and actually, I think, doing the best because of it.
Yeah, no, that's a really good way to describe it between the different companies. I think one of the things is, for analysts, I guess, is the point about, watching where capital is flowing. And it's maybe not as fixed anymore to the hardware cycles themselves, in terms of actually looking at how, to value a company or how to, decide whether or not its exclusivity is worth something. And I mean, the point I think about Halo to PlayStation is I actually don't think it's a defensive move from them. I think it's more about it signals that, IP monetization is now worth more than hardware loyalty, as it were. And that's an interesting point for analysts to try and dig into, I guess, when looking at the gaming sector. Alex, what's your thoughts on that point?
Yeah, I think it's very easy to echo Lou's point here. I think the other realization is that probably hardware cycles got a little bit longer than they used to be, right? I mean, the Switch had been through reshuffle, and the original Switch is a 10-year-old product. It's 2016, 17, right? March, roughly. So that's a fairly long cycle. It's also kind of the interesting thing about Nintendo is that their launch cycle is kind of desynced from others. Right? If you look at PlayStation and Xbox, they often kind of are at least closely linked, and they compete on different things. I don't think anybody is buying a Switch for the graphical fidelity and the very latest amount of graphics of a GPU. But you can clearly see that some people start thinking just about, you just start thinking about the user base of the player base of your games, more so than on hardware distribution, because ultimately, I mean, like we talked about $70 per game, and if you get more out of a single game, then you start caring way much more about where the game is, who can easily access the game than about the marginal dollars you get selling the console.
Yeah, we've talked a bit about the I guess strategy within the industry, but just to swing it round, Lewis, to the more, where are the red flags for analysts to be more aware of now, particularly around, we've talked about execution risks and patches and all sorts of different problems, but execution risks, I think, can sometimes be underestimated in financial models, and therefore development delays and patch dependent launches are, real issues for people to try and work out in terms of analyzing an organization. But from your point of view, what red flags do you think analysts should watch out for, given what we've just talked about in terms of the way the strategy is diverging and the different approach some of the main brands, whether Microsoft, PlayStation or Nintendo, are taking?
Well, I think two categories are probably ones you need to look out for. I think it's also just worth very quickly just fleshing out maybe what appears on game developers' balance sheets and income statements just quickly. On income statements, the revenue section is actually listed as net bookings. Now, net bookings is a combination of recognized revenue and change in deferred revenue. It's quite important to know this, I think, because I think it speaks to two different accounts in the balance sheet you need to look at, deferred revenue being one, and capitalization of assets in the asset pot. Because costs are capitalized, put on the asset, that balance sheet. Any money that's made from pre-orders or any kind of conversion from monetization in the game are put into deferred revenue until that what you have bought has been used in the game. So if you buy a bunch of currency, let's say it's $100 million worth of currency has been purchased in your game, that will immediately be put into cash and deferred revenue. So your cash flow has immediately improved by 100 million just off the bat. But it's not recognized revenue yet because that currency may not have been used as soon as it was purchased. If 50 million was used during a reporting period, half of the deferred revenue would then go into net bookings. Do you see what I mean? Or recognized revenue. So there is a bit of a distortion that exists with how this accounting works, which make it difficult, I think, for analysts to genuinely follow. Bearing in mind the lack of transparency with budgets, it's also very difficult to really keep an eye on how much a game costs and what the margins are, etc. So red flags would be bloating capital costs with reference to their timeline in terms of any games, any management has set out a timeline of how many games they're releasing over a 10-year period. If it starts bloating close to a release, then there's a problem. Probably signals there's going to be a delay, signals that there may have been lots of reworks or internal resets. So that's not a good start. And it means that their runway execution is going to be a lot longer than it otherwise might have been when the game does release. If a game releases with it's very patchy, more operational capital needs to be used to fix it. More marketing needs to be used to actually fix the problems, to actually fix the sentiment problem that's going to be generated. But in terms of the other side of things, amortization of these capitalized costs, generally speaking, I think that analysts would look at premium AAA, so again, single player experiences, having a quite steep amortization curve if the release is successful. All the money basically comes in at the beginning, you amortize it pretty much straight away, and has a nice flow, and the amortization goes away. If there's any change in the notes about amortization patterns or shifts, if it begins later, if they move to a straight line amortization schedule, that's a problem. Yeah. It signals they're trying to soften margins, perhaps. But also, again, in the long term, in terms of like live service games, again, it's both, because you have to pay money up front. And so there could be some amortization happens at the beginning, but when they create more content, which obviously costs more money, again, if there is any kind of changes over time, probably at the latter end of the lifespan of the game, if there are schedule changes, it probably signals that the developer knows that they are not retaining the players that they once did, because cadence is thinning, content is thinning, there isn't much differentiation or mystery anymore, and players are just looking elsewhere to spend their time. So those, I think, are major red flags that people need to look at, analysts to look out for.
Yeah, no, I'd agree with you. I think for me, building what you just said, development delays, you say amortization assumptions, especially if they're pushed out or reclassified, and patches, as we've talked about, all sort of distort the near-time earnings visibility. It's quite difficult, I think. And then also, I've always been curious to look for the soft language, things like, people often say like revised timelines and testing. You see that sort of soft stuff coming in, which again, I think is a red flag kind of signal. Alex, what are some of your red flags?
Yeah, I think, Lewis hit it quite well. I think revenue recognition is always the big thing, right? And we have a very, very current story in the market with Ubisoft having to revise revenue down by quite a considerable amount, and by an amount that triggers their debt covenant. So revenue recognition obviously is an issue, in particular as your revenue streams become more uneven, right? It's not. I think it used to be that a lot of revenue is just earned on launch, launch month, and then you kind of, as Lewis expressed, right? All your amortization is gone. you basically your next dollar of revenue is effectively 100% profit, and that's nice. And now you have kind of all of these interesting revenue streams. You have live services which have kind of a delayed effect. You always have kind of the challenge of how do you recognize the revenue. Amongst other things, you have live services being sold from a publisher to a specialist live service company, which from all it appears is the underlying issue in the Ubisoft story, actually. And it's and that kind of has a different, because obviously then there is a revenue conversion happening somewhere along the line, and kind of Ubisoft is no longer exposed to the actual consumer revenue, or not 100%, but they are exposed to the revenue of their live service provider, and that's kind of putting revenue recognition, kind of one of the traditional red flags in every accounting analysis, squarely in the eyes of people looking at gaming, because it's becoming more and more an issue.
No, you mentioned live services. We haven't really dug into that too much. So let's have a sort of conversation about that in terms of is industry sort of fatigue hitting live services, or is cadence still the sort of main driver? I mean, I look at things like Epic, Activision, etc. Lewis, what's your thoughts on is there content fatigue going on in live services, do you think?
I certainly think that the generic mechanics of monetization are reaching the end of players' tether. They know what to expect: battle passes, cosmetics, subscriptions. They're very heavily optimized. Developers know players' behavior at this point, and so I think there is a general fatigue in the mechanics. But I think that monetization in of itself isn't going away. I think it's more maturing. We haven't really talked about mobile games either, but it's a good time to bring it in here probably, because that's where you're going to find the most innovation in monetization, because they're free to play games and there are ways that they can generate revenue off the back of a player without actually even asking them to actually put any money forward. They can actually reward players with adverts. So if there is a point where you lose all your lives, the game might say, watch this advert, we'll give you 3 more. So you're not actually asking, they're asking for your time, 30 seconds, rather than actually any upfront cost. Other games like Candy Crush back in the day, you can actually buy power-ups if you're actually really struggling, because the thing about these games is there isn't a story. There are just almost an infinite number of stages that you can go through. So these games are made to be time killers. And as mobile games are played on the train, in the airport lounge, on an airplane, in the office, on the toilet, if people want to play these games and they want to kill time, they will probably just spend a little bit of money, and that's where the innovation will come from. When these transfer onto live services, they're generally heavily diluted, but they're incremental. So we're already seeing, you mentioned Fortnite just a minute ago. Fortnite have a very, very clever strategy of actually having a lot of crossover with popular culture, for example. If there's a season comes along, they have a lot of cosmetics to do with the season. I think when movies come out or TV shows come out, they will have cosmetics that relate to them. So there's been Batman, Superman, any superhero you can mention, you can get a cosmetic for that in Fortnite when the cultural zeitgeist is at its peak. They're very, very good at typing these things. That's the kind of innovation we don't really see from anyone except for Fortnite. And it may well be a licensing issue, but then again, if they corner that market, they've cornered that market. But yeah, so to summarize, really, mobile is where you find the innovation. It will be transferred, I think, very slowly over time to live services, but in a very diluted way that also obviously skirts around regulatory risk. Not many RNG loot boxes happening at the moment, AAA, but gacha games on mobile, it is rife. It's how they make their money extremely quickly. And so that's where the risk comes in from the mobile side, because if that gets regulated, then many, many mobile publishers are going to be in trouble. But I don't think you're going to see that at all in console games and live service games. I think it's going to be more about cultivating the player's identity and monetizing that. I think it's going to be the next big thing. So like creating your own avatar, creating social spaces with clan members or whatever, really digging deep into what they can do. Not doing anything surface level like paying $8 for a coat of paint, which is what Halo Infinite did. absolutely ridiculously stupid monetization strategy, but actually doing something very different and unique to make you stand out more rather than buying an outfit.
Yes, yeah, no, I think that's a very good point. I also think that mobile gaming and console gaming are very different. Mobile gaming is not just a smaller version of console gaming, if you see what I mean. I think the other point you raised that I think is interesting is that when you talk about licensing, I've seen a lot of mobile games recently trying to develop this sort of XR capability using headsets, the light from the phone. And there was one particular one that was trying to use the phone as if it was a phaser from Star Trek, that you could go out into an open space, you could use your phone, put on your glasses, and you would effectively battle people in a sort of Star Trek environment in Central Park kind of thing, with the park being mapped and loot boxes all over the park based on your eyes. But they couldn't get the license for it. And to your point about, you know, places like Fortnite and that level, that size of studio can still dominate that, whereas they had a great concept, very innovative on mobile, moving very quickly, but they just couldn't get the licensing. They tried to switch to others and they still couldn't get the licensing. And whilst the concept was great, they could never actually bring it to life. Alex, what's your thought about live services and particularly fatigue in that space?
The thing with live services is always kind of fascinating to me, and maybe this is more a factor of age, but I always find it fascinating how many diverse live service games are out there that kind of on the face of it seem to be viable, right? I think when we think live service, we think of Fortnite, right, which is the big game, but there is a plethora of like fully viable live service games on like a sliver of the player base that just work and that, you know, won't go away for years or even decades, where, you know, that have innovation and that have innovative commercial models. Like if you think, for example, about a Path of Exile, which I think is kind of one of the first games that had this you know, heavy cosmetics focus on monetization, that is viable with a sliver of the player base than a Fortnite is, and I think there's lots of them. I think the other thing that I always find fascinating, and I remember there's always a story, like once a year there's a story about, you know, some AAA game trying to introduce ads into their game. I remember kind of the first game I saw this was Need for Speed 1 or 2, who, you know, had partnerships with car manufacturers and had like literal ads in the game, and they made some revenue from that, some marginal amounts of revenue. And I think the fascinating thing for me is that nobody has cracked this kind of fully on integrated, immersed in gaming experience yet, to make it like a viable thing. Lou said, right, on mobile you have you know, watching through an ad, suffering through an ad, and then you can continue playing. And it's fascinating to me that this kind of that nobody's kind of going all out doing this on console or on PC, and is trying to kind of non-monetary, non-cash based revenue streams.
I mean, I think you're right about the advertising piece. I mean, I think it's a really difficult one, isn't it? I've seen some really bad examples of that, you know, where they're trying to insert advertising within the game itself, and it just simply doesn't work. I also think it's a problem that stretches more across the whole entertainment industry, because you look at film as well. I don't know if either of you or the audience has seen the new Jurassic Park film that came out in the summer. There's a shameless Twix wrapper, which is a chocolate bar manufactured in the UK, that blew into the door, was perfectly positioned as advertising, but it kept the door open so the dinosaur could escape. So I think it's a little bit, for me, the advertising in mobile gaming, and slightly different to console, is a bit like, you know, you're trained. At the moment you see a a game or a film that contains CGI characters, you know they're non-human within a split millisecond. And I think advertising is a bit like that you immediately detect. There was like a radar that you have that you detect that it's something that's disrupting the experience in a gaming flow that maybe shouldn't be there. But I think you're right about that. No one's really cracked it yet.
It's fascinating because on the film side, people have, right? I mean, like it's like obviously what you're describing is a disruptive scene, but if you look at the movie like F1, the Formula One movie, that movie was ostensibly solely financed by fake sponsorships on like a fake racing team in this movie. And there are major, massive brands taking out sponsorships on, Brad Pitt's character racing around the fictitious Formula One circuit. And I think that's, and I think in movies, nobody bats an eye anymore, right? That you have these sponsorship, that you have, James Bond wearing an Omega watch, or that you have the Twix bar in Jurassic Park. I don't think anybody bats an eye, and it is clearly not the most. It's clearly not the biggest revenue stream that's happening on the movie and even on the TV show outside, but it is a noticeable revenue stream, and I think if the gaming industry is selling $2 cosmetics to get a revenue stream, right? I mean, like, is it really like, why are we not like, what's so, I don't know, I probably know the answer, but like, what's so difficult about selling your fake gold Omega watch?
I think the problem is the implementation. How you do that, console game is the big problem. I actually think there are some circumstances where you could do it, and I'm thinking of two games in particular off the top of my head, two that are very different. Helldivers 2, it's a game that's a multiplayer game, live service ostensibly, on the PlayStation. I think it's on the PC as well. Either way, it doesn't matter. The marketing for that game leaned very heavily on kind of over-the-top propaganda, democracy propaganda. We are United Earth. We're going to go out there and we're going to destroy the bugs. All this kind of thing, and aliens, all this kind of thing. And they bring in like Terminator enemies as well, robots and stuff like that. Because of how well received that's been, how charming I think it kind of is to a certain degree. You could implement advertising in the background using that kind of comedy to do it. I think that actually, if you lean into it and buy into it, that could be a way of doing it. There's another game called studio called Remedy, who are a Finnish studio, and have made quite esoteric, I want to say, games to a certain degree. But in their games, they have live action, snippets thrown in to add to the gameplay. That's totally separate from what you do as a player, but they add to the story they're trying to tell. And again, they lean into the more comedy side of things. I don't think there's anything wrong with, again, sneakily, if you like, or brazenly, either way, if depending on what effect you want to bring, putting advertising in games that way. Totally remove it from the player's hands. Don't throw it in front of the gamer's face as if this is an advert, recognize it's an advert. Make it fun, make it quirky, make it interesting, but make it at least fit, sorry to use the wrong word, the verisimilitude of the game. Don't just ham-fist it in. Make it seem seamless. I think that's the way to do it. But I think there are only certain games you can do that. You wouldn't be able to do that with first-person shooters or anything because, again, the people who play that game are very attuned to this. I think if you do it in other games, and even games that actually don't have any multiplayer, they can use that as an example because Alan Wake and Control, which are Remedy games, they're not multiplayer games, but then they could quite easily put advertising in there subtly and in a way that fits what they're trying to achieve.
Yeah, no, I agree. I quite like esoteric games as well. I got into Limbo. I don't know if you remember that a few years back, which was a very sort of scrolling kind of platformy type game, which I thought was good. Well, we couldn't have any festive cheer without mentioning the regulator, given it's coming up to the festive season. So I do want to we've touched on them a couple of times, but, this question about how exposed are, kind of, especially the large cap publishers, and Alex is putting his hat on, I'm sure, especially for the regulator, that with regulators getting more active, what's your thoughts on that, Lewis, around, how exposed are they, particularly when they drop in the sort of chance-paced monetization pieces?
I don't think that AAA live services are actually that exposed anymore. I think they were about 7 or 8 years ago, with a couple of very, very bad examples. I think we mentioned this in the previous discussion. Star Wars Battlefront 2 was, I think, a bit of a turning point for how developers actually look at how they execute these kind of things. Anything that's got random number generators involved, in other words, you basically pulling a slot machine and you get something without being transparent about your chances, I think, for example, and also not having it age locked. These were problems that were brought up by multiple international legislatures who are interested in actually going into this and regulating. It's more of a problem. It's more risky, on mobile, because mobile had gacha games, and gacha games are designed so that you actually have to roll the dice, essentially, to get new items so you can improve your ability to play the game. And you use it by getting in-game currency. Now, in-game currency can be earned in the game by playing it. Well, obviously, it's far quicker, more efficient for you to just pay a couple of dollars or however many yen it might cost in the equivalent, because it's very popular in Japan, and then roll the dice. And it gets to the point in gacha games where there's systems implemented where if you go for 40 rolls, that's the terminology, and you don't get a very rare character, you're basically given one out of pity. So it's almost if the game knows that your chances of getting him are very, very, very slim. So they'll throw you a bone as to keep you playing with this new character. But they know that at some point you're gonna get bored of this character. You want to play something else. But that is how their revenue model works, and it's very successful. And it's not really, again, looked at, because gacha games operate on a different kind of formula. There isn't really a story. There isn't a loop that opens and closes in a way that's satisfying for the player. That's what console games are meant to deliver, those kind of experiences. But again, gacha games are more about collectibles. They're more about killing time. They're more about an expression of yourself, and also continuing to beat layer after layer after layer of gameplay that the game continues to bring in, because it's so much easier to update mobile games, so much cheaper, and the ability to update them is so much faster. So you can have a never-ending churn of different kind of gameplay loops, which the players are going to be engaged with, and they're going to keep paying this money, because if you introduce new characters, new items that you can only get through this gacha system, they're going to keep paying more money. So that's how it works there. But I don't see that ever happening on consoles ever again, because it's far too risky. Whereas on mobile, because the costs are relatively low and the price of failure is relatively low, I think it's something that you'll see a lot more on mobile for the near future. Whether the regulators step in, I don't know.
Yeah. I mean, Battlefront 2, as we've mentioned on previous ones, is a great example of where issues have been in the past with consoles. Alex, you've got your regulatory red hat on, and I've got my regulatory wreath, which is a pun in itself. But your regulatory red hat, how do you take this perspective in terms of monetization risk, particularly around chance elements in games?
Yeah, I think it is the big risk of it's one of the two big risks in the industry. I think, and I'm way more comfortable on the mobile side, because on the mobile side, even though what Lewis is describing sounds insane, you have kind of a de facto regulator that has done, I actually personally think, a really, really good job reining in the excess of this, which is the App Store. Right? I think if we're thinking back 10 years ago, there was pure abuse. There were problems with underage consumption of these games, of excessive spend from children, and the quasi-regulator, the App Store, has stepped in and has put an end to it, or has put a cap to it at the very least. And I think they've done a good job. And I actually think this is I would be way more comfortable on the mobile side, even though some of the chance elements are a bit more extreme. You have somebody taking it seriously because they can't tolerate the bad press, and they don't want the regulators stopping it. On the console and PC side, I would be worried. I think there are obviously not as extreme things, but they are still, you miss the regulation of an app store, of an intermediary entity that's taking the excess out, right? If you just look at the average spend that a player has on an EAFC game, it is insane. And that's the average, right? That's not the excesses. There are cases of 4 or 5 digit spends on EAFC, and that's every year. And I think this is something where eventually either a local regulator or a regional regulator will just say, right, just stop it. This is insane. There is no gameplay justification for this. There's no reason why a football game should have a chance element.
Well, I guess it's because they built a ecosystem to make that economically viable. The ultimate team economics, I think you can kind of describe it as, right? Where you build your own team and you open packs to do them. I totally agree with you. But this is the interesting thing, going back to the thing about Netflix. Are Netflix actually going to introduce something like this in their FIFA game? They've got precedent to do it. How they would implement it is different. But James, you were talking about earlier on how they would monetize this if it's going to say subscription. Yeah. Well, they have an avenue to do it, and it is actually something similar to this. They've got FIFA's license. They'll probably be able to use all the players. So what would be stopping them? Except for maybe on the principle. But I mean, is that going to stop them? I guess it depends on how it performs and how it's made when it comes out. But I think that's a bigger risk. I think, as Alex says, I think that is the big risk. You are right to point that out. That kind of economic model, I don't think is going to be very sustainable if there's no regulator in place to say, well, look, we know that, for example, young people are spending enormous amounts of money that's not theirs, it's their parents, for example, on a chance mechanic. This has got to be predatory to a certain degree. There needs to be a greater level of transparency about chances, etc. And this may well have an effect on drifting people away from it, but would it have the same effect on children? That's a different question. I'm not going to comment on psychology of kids in this, but I think we all know that the annual revenue per user on FIFA is high for a reason, because the main player base of FIFA are going to be teenagers.
Yeah.
Yes. Yeah. No. I've contributed myself to that revenue stream through various members of my family doing exactly what you described, the card packs endlessly being opened. And I find the Netflix one interesting because, again, like you said, they've got the license and they have got form in this space. So it will be interesting. They've got a different brand as well compared to a gaming brand. That will be an interesting dynamic that, when Battlefront 2, I think it was, did the loot boxes, and you actually had to work out, you spent hundreds of dollars to even try and basically unlock the main characters, like from Star Wars. You realize that was grossly unfair. But Netflix isn't a gaming studio in its own right, so it probably has more stretch to be able to do things like that. So that will be interesting. Alex, what was your thoughts?
I have thoughts on Netflix that obviously kind of are not gaming related. I actually think Netflix is fascinating because they have done, this is not gaming, but Netflix is fascinating because they're the first company that has kind of migrated away from this, single price subscription into a ad supported model. And I think everybody, when they announced this, everybody was skeptical, myself included. I don't think we were expecting that they could defend the price point, and that this isn't value destructive on either side of the equation, at least. And they pulled it off quite remarkably, actually. So I have, if there is a company that I'm kind of optimistic that might be pulling off an interesting commercial model on the gaming side, it's them. They have done gaming, right? I mean, they have gaming subscription, but I don't think anybody takes them serious. Be interesting to see what they do with a major IP, which FIFA clearly is. But I think if there is somebody that has the creativity and the business acumen to, broach a new, from outside the industry, broaching a new commercial model, it's clear that.
I find it curious. They've gone with a studio that hasn't produced a game, as far as I'm aware. And you think that's high risk. I can't imagine. Can you imagine going through the committee that decided that and said, "Yeah, we're going with one that's never done anything before, but we will get it out there, done and dusted before the World Cup," which is clearly the big tie-in next summer. We've just got 5 minutes left, Lewis. I wanted to just come to you just with the final thoughts, and the same with you, Alex, around innovation in terms of where do you think this is going next. We've talked about a lot of things that have changed over decades to some extent, whether it be franchises continuing in terms of legacy, or new dynamics entering the market, restructuring how monetization dynamics are working. Lewis, what's your thought on where the innovation is going to come next in this sector related to what we've talked about?
It's always very hard to predict the future in this way. I think that I actually think we're going through something of a cyclical pattern in terms of players and consumers' behavior when it comes to games. I think that the advent of so many of live services being somewhat ubiquitous with big franchises is actually creating a gap in people's minds as to something they actually want outside of this sphere. And so I don't think I think innovation will be incremental, as it always is. I don't see VR or AR being particularly big movers for a long time, because again, if anything else, there's a component which is contingent on space, and the fact it's also a very isolating, very personal experience in a VR headset. You can't really do it with anybody unless there's some kind of cooperative capabilities that have become much easier to use, and the games on them become longer lasting and more fun from maybe a party or community sense. I don't think that's going to be it. But I think that we're really going to see more of a move towards, again, more incremental, more personalized monetization in these big franchises with big studios, with big capital and massive teams. And you can have smaller studios or mid-sized studios that we're already seeing continuing to profit from this gap in the market, which is, complete single-player experiences that do the things that gaming has always innovated on well, like fidelity, like mechanics, etc. When we have these big GPUs that are not really being fully utilized yet, we have these big new engines coming in from Unreal, which obviously have been shown to create incredible new experiences from a fidelity perspective, but also from a gameplay perspective. It's really about what new small studios can actually do these things well. Expedition 33, what cleaned up at the Game Awards last week. Whether you think that is a sign of things to come, that's up to you. But that game cost between $10 and $30 million. It sold 5 million units at $60. That's a big ROI. That's an ROI you're not going to see many big developers making. And so because of that, I just think we're going to go through this cycle where there's a big market for both, and any innovation will be incremental, but we'll just build on what gaming has always done well. I don't see any major things happening down the line. No,
I agree with you on that. I agree with the VRX. I've seen a lot of organizations flirting with that as maybe a year or two ago, metaverse type concepts coming in as well. But I've seen a lot of that now fall away. Alex, just final thoughts from you on innovation in the space.
Yeah, I think if you talk about business model innovation, I think we're clearly talking about spreading the IP broader. Having merge, having the IP in movie form, those kind of things. I think you have some really, really good IPs in gaming. They are still comparatively underutilized, in my view, and really digging into commercializing the IPs more and more, and that might take any format. I think that to me is the big thing on the business model side, and I think there are kind of a couple of innovations on the creative side, but I think the creative side is it's kind of harder to judge from sitting behind the desk being an analyst. The business model side really is the one that you need to look at.
Yeah, no, that's great. Well, we certainly got creative today with Christmas hats, Christmas wreaths, and some festive cheer. As we discussed gaming's next gen risks and returns. As always, check out the Marvin Labs blog for recent articles on this topic and others. Lewis, Alex, thank you for your time and being part of the panel, and to the audience, have a great seasonal period. Thank you.
Thank you, everyone.
Thanks,
Have
everyone.
a nice festive season.